How's it going?
Hi.
Good.
Hi, Tom.
So today we're going to have goldfinch and badger, right?
Exactly. Yeah. I'm going to present Badger, and Jeff Tang, I think he's not here yet. He's going to present Goldfinch.
Recording in progress.
Yeah. I think he's going to get someone from goldfinch to join us.
Yeah. The idea is that he's also joining later, because the guy from Goldfinch, he supports his presentation is on the West Coast, US West Coast, and so maybe he will join half an hour. So. Yeah, that is that today we have like a normal call, and then we will maybe move to a more social part of the call if we are over with the presentations. And I ask you to stay in the call, because we have we try to make it a little bit more social, and we'll announce this again. So I made a few slides for the general stuff and then for my presentation. So I share my screen. Or should we wait? No, we don't.
Hey guys.
Hi. Hi, Jeff. Hi. Nice. Yeah, I'm going to share my screen.
Yeah. Do you want to announce the good news, the rewards for this week, Martin?
Yes. Yeah, exactly. They're coming. So the news is that the community vote is over. We have like three winners this time. Jeff Tang, Defy Dad, and Hassan didn't make it, and Charlie told me they are already disputed to them. So congratulations. And other news, we are still in the process of adding new members for the Boule for season 2. I think I reached out to everyone also with the mail, and please think where you can nominate for as new candidates. We're still collecting the candidates. I will propose 2 different people, and this is more next week about this. But if you know somebody who would like to be part of the Boule and be part of Al-Lindau as a Boule member, please fill out the form. We have like 2 forms. One is for the person who applies. This is like the original form from the first round at the beginning. And then I have a form that you can fill in, that we see where which candidates you propose, and you can propose several candidates. And I think the thing is, if you propose candidate and the candidate is successful, then you earn rewards on them in the future. So today's lineup, it's me. I present Badger, because I did also present Badger at the first round, and then there's Jeff Tang with Goldfinch. So we are still in this intermediate season, so that people do present a dedicated strategy for protocols, but some of the members suggested that they rather want to present new protocols. So we opened it up, and Jeff Tang is presenting Goldfinch, a new protocol. And we see how we deal with this. So that is that we still do this initial allocation event, but maybe I just ask the Boule members to reach in their strategy in written form, and then we are going to vote about this. Myself, I stick like with the original protocol I presented. I've been the unlucky one, it's the only protocol who got like hacked shortly after my presentation, and this is Badger. And this is also like the entry to this presentation. You see there's this sharp drop around December, and this was the time Badger got hacked, and they lost quite some funds. In a way, it's like, I guess it's one of the first hack which has been done in this way, and it's surprising that, because it's quite an elaborated hack. So they did get access to the hosting, and then they had like they injected like a JavaScript to then sometimes if they did see that somebody is coming and interacting with a big treasure, a big amount of BTC, then the script itself faked like an ask for permission, for transaction permission. And I assume most of these people already had, most of them people already did it, but on the original contract, so they're allowed on another address to have access on the funds, and so they waited sometimes for this, and I don't know, I think 2 weeks or so, and then they use this access to withdraw the funds basically. And yeah, it's more on the hosting layer. This hack has been done more on the hosting layer, and of course it's the team or the project to blame in a way, but it's not that the contracts have been safe all the times. And yeah, I'm surprised because it's one of the first hack I've ever heard who happened like this, and it's in a way it's more easy target. It's on a very different layer. You don't have to know anything about smart contract. You just you fake the access somehow, and yeah. So they lost money and they lost value, of course, but the project is still intact, and they also did. Some of the people have been refunded because they were able to get access to parts of the fund. And currently, there's not a lot of information what they're doing with the loss, if they have plans to ever to pay it back. And this, of course, is also some kind of risk or burden on the project. So this is the job. If you see, they had like $80 once, and now it's around, yeah, you don't see this, like sub $10 right now. But of course, it's also the general market sentiment right now. And if you look at the price at ETH, yeah, it looks more flat than on the dollar price, because ETH also went down somehow. And why I still think Badger is a valid strategy is mostly because I think they have an awesome team who is very well connected, and they are very, on the technical side, they're also very good. So even if you did see how they reacted to this hack, they did it in a somehow very professional. And yeah, and the other reason is why they are well connected. So they play the convex game. You see here that Badger there's a website where you can look how the curve or the convex war is going on, and you see that Badger has quite a lot of convex, and mostly because they did a pool. They did very early on. They did a pool where you can where you could give in your convex, and they logged it for you, and they voted for their own protocols. So they are on the second spot there. But what you also see, if you look at the chart, you see that Frax is really the king of the convex game somehow. They have the most, they are the first spot right now. And the black one, this is Badger. Maybe it's going down a little bit with C, because they just, at the moment, they are unlocking some of the, because the initial period is over. So they always have a time they unlock the convex, and people can then withdraw convex if they want to. And if you stay, they're going to lock it up for another 16 weeks. And yeah. So today I went to Discord, and we see that they really dedicated on this convex strategy and how to incentivize their own pools with convex over curve. So they're very focused on this in a way, to be part of this, and I think they have a good head start. This is it's a YouTube course or YouTube video they shared in the Discord today, where they talk about how this could be successful with convex they hold. So what I suggest is still, I didn't just suggest the strategy in Badger. I just went over the protocol, and now I did use a strategy somehow. So I still think the interest-bearing Bitcoin is one of the main product they have right now. and I'm going to explain it a little bit closer. So finally, eBay interest-bearing Bitcoin is like an index of 3-4 different Bitcoins: VBTC, RAMBTC, SBTC, and TBTC, and they have so it's one token. It's like an index, but it's represented by this token. And there's maybe some confusion. There's like EB interest-bearing Bitcoin. This is from Badger, but there are also EB USD, and this is the short version for Iron Bank. So these two projects has nothing to do. But if you look at Curve, you have EB BTC. It has nothing to do with Iron Bank. It's the project from the token from Badger. So this is the price, of course, follows just Bitcoin. That's what it does. And then if you look closely, they have a curve pool, and the curve pool is the wrapped EBBTC. So it's again wrapped to be on this curve pool, and is paired with curve REN BTC. So today this pool has 300 million BTC in it. So, and you also see that the volume is very low. I think the liquidity utilization is just wrong. It's somewhere calculated wrong because it's so low. I guess maybe it's just it's strange. It's not it's very, very low, so it's not really used. So, but strange in this other things is one of the weaknesses I see in Curve is that Curve is like incentivizing standing liquidity, and this is the game in a way Badger is playing. It's not about getting traffic on this VEBTC, so people buy it and sell it. It's much more having a pool and then incentivize this pool. So you submit your IBTC to the pool, and then you are in this pool, and then you have two possibilities. Either you can submit this pool token to Curve directly on Convex, and then you're able to make like around 4% right now with the price right now, and this is put together with you have the basic API, and then you have some of the boost, and then this is what you get if you do it this way. But the recommended way, it's doing it over a vault where Badger itself has a vault, and this vault has right now like 8% on top, and you get different tokens for this vault. So you take your Curve token, Curve liquidity token, and submit it to the deposit to the vault, and then you have two. They have two interfaces. Either you submit directly the token, the liquidity token, or you can also submit submit directly your BTC, and then it wraps it up all fast. But they have is a performance fee of 20%, so they take some performance fee, and to stabilize and that people don't withdraw, they have a withdrawal fee from 1%. Then what's different, you can even get much more yield here. You can boost it, and the maximum boost is 50% yield a year, and this is quite high. And boosting works like this: that so if you click on deposit, then you see this, and if you click on the title, you come to this graph, and you see you can boost it. And the boosting is done if you lock up Badger token. So I choose here Badger boost from 600 boost, and this should give you an APR of 20 right now. And boosting works like this. So if you boost and you have native token and non-native token. So native token is Badger. Basically, they have like they made another Badger who like a derivative, but yeah, native is Badger. So you have $1,000 worth of Badger, and you have $1,000 worth of BTC in this pool. Then you have a boost of 2,000. So this is like the max boost, which will boost you up to the full APR. So yeah, what I suggest is that for my strategy is that the strategy would work like this: that we pack BTC and we buy some Badger 2, so to boost it. And the ratio I suggest, I go to the final slide. So it's like 57% BTC and 25 Badger, and then we deposit the Badger, and then we boost our own. We boost the pool, and then we get like 20% on top. And of course, if you think long term, BTC maybe is like maybe we don't know where the market's going, but I guess the market is like BTC maybe go lower, but I guess it's quite a safe bet. It will go higher, and this is like safer than everything else, I guess. And Badger is like not so a safe bet. We don't know how it develops, but somehow they have been able to they have been a good protocol. They have been hacked. They have been recovered now. They did all the things they could do to reinstate this, and it's looked like they're just going on working on this. And yeah, this is the strategy I would propose. And about the ratio, I think I have to maybe read some more how this in depth how it works. Is quite complex, and then because it depends also on the boost ratio, which kind of asset you get for your yield, and this is also to take into consideration. But that's my strategy. So yeah, any questions? Or I think does anyone use Badger in this room, or have used it, or has been in the hack, or nobody? Okay.
I have, yeah, I've used Badger, and I actually particularly like this IBBTC curve LP. So yeah, I now the one thing is, yeah, Sherilyn just noted, of course, the hack, and
Yeah.
so I was fortunate. I actually can't remember whether I'm pretty sure I was in IBBTC uh, whenever the front end attack happened on Badger,
Yeah, but
but
they didn't lose IBTC. They
no,
lose
yeah,
other
yeah.
things.
That has undoubtedly been their best product so far. It's just continued to yield really higher rates. It's dropped quite a bit recently, but I think that was expected with like the crazy sort of crypto market crash we've gone through. So I would expect that yield is. I mean, it depends on what happens next, but
Yeah,
it's around like 3 to 4% on convex with all of the different rewards that you're earning. And yeah, I mean, I like pools where you're exposed to only the price of Bitcoin. You know, you're earning those trading fees. You're earning, in this case, multiple, I would say, blue chip tokens. Which in that, I'll just say, at least Curve and Convex have been like two of the most popular, best performing DeFi tokens. Badger has obviously again taken a hit, but I mean, throwing that aside, like you can't have everything in a single strategy. So that this is, yeah,
yeah. Of
this is a
course, this is the big thing. Or how do you handle projects which have been hacked? This is like. But I still think they're very strong in a way, and much more because they're so well connected. Basically, this is the
yeah.
main thing
I
that I see.
I can't vouch for them as a developer. Clearly, I'm not a developer, but I have. When I worked at Zapper, we worked a lot with Badger, and I'll just say that my friends as engineers just always had the best compliments to pay their team. And I've checked in since then and asked, like, hey, do you think anything has changed since the hack? Like, and I will say they were pretty. I mean, their takeaway was that was a brutal sort of situation that could have happened to any team. Not making excuses for them, but basically said like the Badger team is still a very it's one of the better engineering teams based on where they sit at Zapper. So, anyways, yeah,
Yeah, but you many times see that these teams fall apart about this. You know, you have a hack and then
yeah.
they have some infights and then it's like, yeah, it's a bad situation. And if you're
Yeah.
able to recover from this, it's still the same team. I think this is a
Oh, by the way, I say everything I just said. I am not a Badger holder, so I don't have any sort of financial upside in wanting to talk
yeah.
or say
Yeah,
nice things.
me neither at the moment, but I really think I should. Yeah, I would of course vote for my own strategy, and I
Yeah.
think it's. I said holding BTC is never wrong somehow, and yeah, I guess. Yeah, so I don't know, Jeff. Do you think are you ready, or shall we wait for or maybe you can, I don't know. But
Yeah.
what did you present last time?
Last time I presented tokamak.
Okay, because we did like some reflection how the project did since then. And maybe you can have just a few words about tokamak, what you did see there, or how do you feel about the project? So I guess you followed what they're doing, and maybe you can update us, and we wait for
Sure. So
the Goldfinch person to join.
Yeah, sure. So it's my friend at Goldfinch is based in the Pacific. I think this is a classic recurring issue with Aladdin DAO. Everyone's just geographically different places. I don't know if he can make it. In terms of tokamak, the TVL is still pretty consistent with when I last chatted about tokamak, and the price hasn't. The price of the token itself has not taken as huge of a hit as some of these other DeFi tokens. I feel it's just thinking back about in terms of the strategy side, I'm relatively conservative, and so if you look at, for example, like the stable coin pairs, the yield on tokamak is around 4%, which isn't anything sexy. I think it's relatively safe compared to a bunch of other strategies, but I wouldn't want to pitch a strategy that makes 4% yield on something that doesn't have any upside potential from a price perspective. So that's the primary reason why I wanted to find another DeFi project on the yield farming side.
And on the product side, I never looked this close to tokamak, but I did hear rumors that people started to, they still are not productive, I guess. It's just
correct. Yeah.
Okay.
So there's two things going on, and I'm mostly just an observer. I think one thing going on is the team behind tokamak is, I believe, now working on something that's different from tokamak. So there's if you follow their Twitter, they've been hinting at an OTC DeFi product, which I think is a pretty good kind of product that doesn't exist at the moment. So, it's just speculation. It's probably going to be something related to like a decentralized exchange that can take down extremely large orders relative to typical, smaller size retail orders. That's the first piece. And then this, the second piece is I do feel like the amount of work that is required, because they have to go out on a project by project basis and incorporate these token reactors and do the token swaps. You'll notice that there's only two cores that have been voted through, and one of them still isn't even live yet, the Illuvium reactor. And so, yeah, I think it's definitely a very difficult thing to, for example, one by one go through 11 to 12 projects and do these swaps and implement the swaps and the reactors. But yeah, I need to chat about Goldfinch if you think that's good. And sure, let me
go ahead.
Perfect. Let me share my screen. And let's see, can everyone see my screen?
Yes. Yeah. I see.
Perfect. Let's see how to. Cool. So yeah, so this is a little bit different from TokenMax. So I think I'll still try to, in the interest of time, describe the project in an efficient manner. So basically, Goldfinch, which went live in, I believe, July of 2021 in V2 pool, is DeFi kind of meets CeFi. So, you know, as a yield farmer, there's, at least for some of these pool ones, there's basically three things that affect your yield. So obviously the first factor is the interest itself. So that's on the numerator side. The second factor is the TVL. So that's on the denominator side. And then the third factor is the price of the token that's being given as the interest or as the the reward. And so those are kind of the three things that one has to pay attention to in the pool one. Obviously for pool two, when you have risky assets, you also have to consider the risk and the reward of what you're staking. And so for these kinds of DeFi pools, you know, as everyone who's done a significant amount of yield farming can attest to, those three factors are each in themselves relatively volatile. And so there is definitely a very large amount of basically flow going between pools based on, you know, the APY is really high here, and then it goes to zero. You know, case in point, Compound, June of 2020 relative to now for any of the tokens that are on Compound, and similarly, a lot of the other pool one pools. So one of the cool things about Goldfinch is that the borrower is, it's a 2B to C model. And so the borrowers are third-party companies that lend to microfinance borrowers in predominantly third world countries. And this is the kind of the business model of how Goldfinch works. So there's two sources of lenders and one source of borrowers. And so the borrowers, which is on the right of this chart, you can think of them as entities that later go on and then, you know, lend, relend to many, but you know, particular pool, it'll be one entity. And then on the LP side, there are two sorts of sources of LPs. There's backers, which is on the bottom of this chart, and there's LPs, which are, let's just call them senior tranche providers. So there's, you know, if you provide, and we'll go through this in more detail. So the backers, there's these are, let's just consider it like single risk source lenders. And so they lend to a specific pool, and the borrower itself, they lend to a specific entity, which is going to go out and then, you know, rehypothecate the loan itself to and source various borrowers, and they receive a more significant amount of the interest involved. So for the senior tranche, 20% of the interest is given to the junior tranche. However, the junior tranche takes down the risk in the case of any drawdowns or loans that do not have repayment. And then 10% of the interest payments from the backers are reserved to the team, and then goes into the governance token. So basically the senior pool gets 70% of the interest rate, and the borrower pool gets essentially 110% of the interest. Something that's a little bit different, and this is similar to, there are other DeFi protocols out there, such as Maple Finance, and you know, there's a role called auditors who are have tokens staked, and so auditors get picked randomly to essentially do due diligence on the borrowers, which are once again the entities and not the individual borrowers at the very end of this process. And so the token for Goldfinch was released in Q4 of last year. This is the This is how the tokens are distributed. For the early supporters, early team, Orbital Labs is a spinoff of Goldfinch, and the so for and the contributors, it's a I believe it's a 6-month lockup with 3 years of linear vesting and a 12-month no transfer after the unlock. So, you know, it's pretty consistent with other tokenomics of DeFi projects. And what's really interesting is you can take a look at their total loans outstanding. And so these are based on the locations of the end borrowers. So you'll see that most of these countries are developing countries where these are uncollateralized loans. These countries have relatively high base APYs to begin with, and then we'll go and take a look at some of these pools. So this is from their investment documents. So they so Q1 22 and Q2 2022 are projections. Everything before that is actual numbers. There's a very healthy pipeline of deals that are both in discussion and also already agreed upon that's waiting for TVL to increase on the lender side. So the goal is half a billion, excuse me, USD in borrower capacity by the second quarter of this year. Then looking at some Dune Analytics, this is the TVL of the Goldfinch platform at the moment. You'll see 68 million, and then the total net loans outstanding is 38 million. It's been growing very healthily. And one thing that's really cool about this platform, which I think pretty similar to Maple, is you know, these DeFi protocols, which have real world like on one side of the puzzle, it's basically like a supply and demand balancing game. And so it's probably more than twice as difficult as just a traditional DeFi where it's crypto on both sides. You have to balance and re-incentivize both parts depending on which side is, you know, kind of lagging behind. In this case, it looks like the lending and the borrowing are pretty healthy in terms of the ratio of lenders to borrowers. And this is repayments, so no failed repayments yet. You'll see a total of $1.25 million that has been repaid so far. These are all interest payments, so the principal repaid at the end. And then the gains is just the interest minus write-downs. And so there are no write-downs at the moment. So the 300,000 that's missing is the amount that's gone into reserve. And then, so one might ask, like, who are the borrowers? So this is the list of all the borrowers at the moment. These are the junior tranches, and you'll see the APYs. So these are the actual APYs. So, you know, they're 12, they range from, 10% to 18.75%. The sizes of the pools are pretty variable, from $500,000 in the smallest to 10 million at the largest. And this group is growing, and you'll see that from the borrower side for the junior tranches, every single pool is full. And so it's at 100% capacity. And so now we'll just look at one of those. And so this is AlmaVest 5. So this is Fund 5. So they've done 5 of these loans so far. This is the largest one and the latest one. It's a $5 million pool. Page of the junior tranche. There's 1.25 million in junior tranche, 112 individual backers in this tranche, and then the senior pool, which is an Uber pool, which provides loans to all of the junior pools. For this particular loan is 3.75 million, so it's a 3x leverage ratio between junior to senior. And the total loan here is $5 million, and then AlmaVest itself is a debt capital company that provides loans to various microfinance, small business, or other types of loans. And you'll see that the base borrower APR is 12.5%. The payback is, the length of the loan is 1,095 days. And there's a boost for the junior tranche from the senior tranche. So that's a 6 point. Actually, I apologize. This boost is from GFI emissions. And then if you look at the senior tranche, so this is the senior tranche. So the senior tranche pool balance is 64 million. It's much of this capital has been deployed into many of the junior tranches already. The pool APY itself is 6%, which is obviously lower than all of the junior tranche APYs because it's giving 20% of the APY to the junior tranches. However, at the moment, there is an emission of the Goldfinch token. And so the estimated APY is 72% based on the current TVL and the current price of the Goldfinch token. You'll see that of the 64 million, 33 has been deployed into loans outstanding, and the borrowers have repaid these loans over the past few months. And I think, yeah, and the last piece, so the strategy itself, I'm proposing that we deploy into the senior tranche for a variety of reasons. The junior tranche has a locked period of time. And so I think in the interest of being flexible, the senior tranche has very healthy APYs, both now and after this upcoming governance proposal, which probably will pass. And so I'm going to talk about that briefly. So currently, the junior tranche is yielding less APY than the senior tranche, which is definitely like a bug, not what was intended. And so you'll see, for example, right now, the senior tranche is in this spreadsheet, which was shared by the Goldfinch team. The senior tranche was at 58%, and the junior tranche was at 29% for a particular. And so they want to have the backers TVL also participate in the senior tranche. So it will gather both the higher interest for being in the pool and also benefit from the emissions for the senior tranche. And so after that rejigger, the junior tranches will be at 71%, and the senior tranche will be at 47% from 58%. I think that's pretty healthy, and the yield for these are USDC backed loans, by the way. And so, 48% is still pretty high relative to other USDC based loans. In terms of the risk of the token itself, the FDV of Goldfinch at the moment is around 500 million at a token price of around $5, give or take a dollar. If you look at Andreessen's most recent raise in investment in January of this year, it was a $25 million raise. I think that the FDV is it has room to grow. And obviously, in the current ecosystem, it could, in the current market regime, it could definitely drop. But I think that the token itself definitely has a pretty healthy trajectory, especially as the project is relatively new. And then in terms of emissions, there's a function on the emissions of the senior pool. It's maximized at 0.5% per month of the FTV. And so that's actually a very large amount per month. And so I think that there definitely is plenty of runway, at least for the next 2 years, for participating in either the senior pool or the junior pool. And just because the junior pool has such a long hold time, I think, the senior pool is a pretty great strategy to deploy. And also, on the other side, there are real loans being basically syndicated. And I think, over time, it will grow. And so, as long as Goldfinch, the team is a pretty solid team, as long as they do their job of sourcing these deals, I think on the lending side, TVL will only grow and be pretty healthy. In terms of the team itself, 2 founders, Michael Saul, Blake West. Michael was the previous head of product analytics at Coinbase and head of data science at Medium. Blake was a senior engineer at Coinbase. And then finally, for full disclosure, I do not have any exposure to Goldfinch, either through the token or the equity. I think this is a pretty cool project. There are some other projects similar in the space. of the cool things about Goldfinch is basically like the to B to C structure. A lot of the risk gets essentially kind of like CDO'd at the counterparty side, and so obviously after the credit debacle in 2008, who knows what the correlation ratio is between loans relative to each other. However, as a senior tranche, you do have some protection, and the interest does actually cover. The interest actually covers quite a bit as well. So even if, for example, 15% of all the loans outstanding do go bad, you still end up with like a good situation relative to your principal.
Yeah, cool. Thank you. So yeah, Maple, somebody presented Maple like 2 weeks ago again. Also, yeah, it's similar but different. I have one
Yeah, that was me
question.
presenting Maple. I actually
Yeah,
touched on Goldfinch in my
maybe
presentation
you
as well.
have questions here because you are.
I'm just a huge fan of the protocol. Thank you so much for bringing it up and presenting it. And I'm super bullish on the under collateralized debt space in general over time.
But I'm wondering, so if you farm, it's always the question: do I hold the farm token, or do I sell it? And one is okay. What's the market is doing? Can you sell it later and then sell it for a better price, and so you keep it? But the other thing is, but what's the token for? So if I own the token, is it like government's token, or is it? Do I get a share of the revenues, or?
Yeah. So that's two questions. The first question is about farming the token, and so based on what I read, the GFI, so their token rewards are locked linearly for 1 year. And so, for example, if I withdraw 6 months from now, I take a 50% penalty. If I withdraw 3 months from now, I take a 75% penalty. If I withdraw 9 months from now, I take a 25% penalty. So that's the first thing. And then, I think that generally incentivizes the full holding. There are things that can be done. Like I'm now putting on my trader hat. If you have unclaimed rewards, you can sell the perpetual swaps if you have some extra, capital left lying around. And so if this token does have a perpetual swap, it doesn't at the moment. It's only trading on Coinbase and a few other spot exchanges. That can be done to mitigate that risk, but that requires collateral, obviously, to take on the position. But because the penalty is so large, I would probably wait 6 months and basically do one evaluation after 6 months. Every a 50% penalty before 6 months, you'd have to be super bearish on the token to kind of trigger that. And so I think it's one of those things where it's good to wait and see. And then so that's on the token side.
But you don't have revenues or the token itself. It was one of the my question.
Oh yeah, yeah. Sorry. I'm not too. Let me see. So, I'm not too sure about that. It is in the reserves. So the excess revenues do go to the reserves. I'm not sure if the GFI tokens have a claim on the reserves. Let me ask the team.
Is it a US based project?
So it is a US based project. The team is based in San Francisco. However, to provide liquidity to be a yield farmer, one cannot be US based. So there is a geofencing. I'm pretty sure this is for regulatory issues in the case that the token is deemed a security later on. And so at the moment, only non-US.
So Jeff, I actually have a question. So for DeFi protocols, based on trusted model, so we have to trust the risk management policies run by the team, right? So can you shed some color, like, on how they actually run the risk management policy, and especially, like for the context on borrowers from emerging market?
Yeah, that's a great question. And so, one of my friends is is head of operations there. He was before the head of he was before an executive at Branch International, and so the team does have experience lending to third world countries just from pre-Goldfinch. So that's the first piece. And so Branch International is one of these, you can think of them as the third-party micro lenders in primarily, I want to say South America and Africa. So that's the first piece. And then the second piece is the companies that are in the pipeline. I don't believe I'm allowed to share the go through and diligence all of the companies that are participating, and that is where the auditors come into play. And also, I think as a lender, as a respective protocol participant, I think anyone should do diligence on those individual entities.
Do I have any data to share on their default rate on their loan portfolio?
No. So my list of questions and share that on the Discord afterwards.
I can't hear anybody.
Yeah, looks like, are there any other questions? Yeah, regarding DeFi Dad's question about the unlock vesting milestone, so there is a 6-month linear unlock starting for the early investors plus the team. It is on their website, and it's over 3 years, and there's a restriction on transferring for 12 months. And so I think the tokenomics are pretty standard, but it definitely is a concern relative to price activity on the token. Cool. Sounds like there's no other questions.
Yes, I think, there are no other questions. Maybe wait for more seconds if somebody has anything to add.
If no one else has a question for Jeff, just I'll put into the chat here. There's definitely like an ongoing development with the Anchor Reserve, which would affect the Orion protocol. So just wanted to call attention because I presented on Orion previously, and the TLDR on this is just know that what's happened is there are so many people trying to earn the 20% anchor rate, and there are products like Abracadabra's degen box that are allowing people to wind up leveraged positions and earn even more of that 20% anchor rate, that it is depleting the reserve of UST there to pay yield. So there's about 20 days left before it would go to zero. And that is concerning because that anchor rate drives folks to stake their Luna, to borrow against it. And that when they are borrowing, they're paying an interest rate, and that interest rate actually like creates like revenue for Anchor protocol and makes it possible to continue to pay out that anchor rate. So just long story short, I think it's in a pretty delicate position. I do think that the Terraform Labs is likely to top up the anchor reserve. And I saw Do Kwon put out a tweet and basically polled people how much UST they should deposit. The winning vote so far was 300 million, which is just like a crazy number to look at. And since the anchor reserve is losing it's paying out about 2 million a day. I mean, if that rate continued, which it won't, obviously it's not going to stay constant. Like it's going to go up or down here depending on how many people participate. You can imagine that's maybe another 150 days. And then there's a whole nother sort of like scenario to worry about where if the price of Luna were to keep going down, it actually accelerates selling pressure on Luna, which like puts the UST peg at risk. And if the UST peg fails, then it puts even more selling pressure on Luna. So there was a very virtuous cycle of people bonding their Luna and borrowing against it and increasing the UST supply and growing Anchor's ability to continue to pay that 20% rate. So now all of this is, I wouldn't say it's in reverse, but it's definitely like it's at risk of reversing and getting really ugly. So I would recommend that we, if anyone has thoughts on it, please share it, but we should monitor this closely and definitely expecting Terraform Labs to top that up. But even if they do, we should definitely exercise some caution about this because, I'm a little worried about my main concern for us is we talked about Orion. Orion allows you to earn with stable coins. But when you deposit your stable coins on Ethereum, BSC, or Polygon, it swaps it for UST. So now you are exposed to the price of UST. And so everything I just described puts the UST peg at risk. And so the nightmare, of course, is for like a $10 billion dollar market cap stable coin to depeg. It would just create total chaos, and it would obviously hurt the Aladdin treasury because we would be exposed to that UST peg. So again, this is a pretty doomsday-like scenario. Like if it were to happen, it's kind of like going back to March, April 2020 with what happened when Maker was failing to liquidate vaults. And so anyways, I wanted to call all of this out and then I'll post a few of the threads here and just, make sure that we're exercising caution before we enter into Orion, if we ever enter into Orion in the future.
Yeah, thanks. Yeah, this is, of course, we see as the market is going down, we see, more problems. But one question is that, why don't they cut the rates? Couldn't they just make a decision to pay lower rates? Not a lot, but just...
Yeah, and sorry, I'm leaving that out, but that's another trigger that can be pulled is pay lower rates. But if you start to pay a lower rate, it means that it's very likely that folks would burn their UST because they would no longer be earning a high enough yield to justify borrowing to earn or whatever strategy they're executing. And then that increases the supply. Actually, I think I'm describing this correctly. that increases the supply of Luna, because Luna, once you bond it, it's being used by validators, and my understanding is this would create selling pressure on Luna. So it's kind of, someone in here mentioned, they said violent delights have violent end. From that eight, I love that show on HBO. I can't remember the name of it. But this is kind of, this is a
Westworld.
worry over it going up so fast in price, and like, could we see a reversal where suddenly all players are, Terra, or I'm sorry, Luna holders suddenly lose faith in Anchor, or just have no incentive to no longer be there. And then that causing pressure on the UST peg as well, which again, it's just a very like, it's a very scary scenario. Like, I've definitely I've rationalized that it's very unlikely that this will happen. There's just so much at stake, and there's such a large flourishing community now within Terra, but the probability is definitely greater than zero. So I want to like call that out.
Yeah, thanks. I think that's. I don't think you're responsible. In a way, people are grown up, and even if people or members suggested things, everyone has to do their own due diligence, and this is really true. At the end.
Yeah. Yep. Yeah. So I'll throw there's a really great tweet thread that hasn't been it's well explained, and
I posted another one who is more somebody tries to.
Oh yeah, that's right. Yeah, we talked about this a while ago. That's the CTO of Acropolis. That was a really nice write up too. Yeah. Anyone else have thoughts on this at all, or like, do you? I mean, again, I would say I'm pretty. I'm not concerned, I guess, at this point, but I recognize like the situation could get really ugly really quickly.
But I think they already had like this crisis in the last crash in spring, and they survived it somehow. So
I agree.
I guess chances that they are able to recover again is
Yeah.
And
I mean, I'm by the way too, I'm a Luna holder, so like I have I definitely have reason to be concerned about it. But yeah, I'm actually less worried about. I know that Terraform Labs and Doe has a very he has a great following, and he's just very well respected and has like a track record to be trusted by the community to like act in the best interest of the community. But the problem is whether the crypto markets in general just continue to crash. I mean, Luna will not be able to. They could top that thing up as much as they want. Luna will just continue to crash with everything else in the market. And if that happens, the number the one person called out in the thread was around like $29 for Luna, which is about a 50% drop from where we're at. And that, if anyone remembers 2018, 2019, you always forget that you can drop another 50%. You drop 50 and then you think you're done, and then you drop another 50 and
exactly. I know the feeling.
Yeah. So anyways, yeah, hopefully that's helpful to folks. If anything, it's a very interesting situation to monitor.
You mentioned the degen box. I haven't looked into that yet. Do you feel like you could explain that briefly? That's like a leveraged farming
maybe
technique.
Tom, just because we did say we split. We have a new we do the call a different way. We have this more research-oriented call, and then we go into a more social chit-chat call. And I think because we hit the hour, we can now easily go to the more social part, and just go on. It's just, and maybe we don't record this because we have then other topics to discuss.
Yeah, I'm happy to leave it recording if it's helpful to anyone. These are all ideas I would definitely share publicly. Tom, and wait, sorry, did Tom? Were you saying was
Yeah,
Tom
yeah,
supposed to
Tom.
present?
Did I what? Sorry.
Oh, Tom, you just asked the question. My bad. I'm
Yeah,
Yeah.
sorry.
yeah, yeah.
Yeah, yeah. Sorry, can you repeat that just once more? I was about to answer and my brain just fried.
I haven't looked into the Abracadabra degen box, but I'm wondering
Oh,
what
yeah.
that. So that's like a leveraged way of farming on Anchor, kind of.
Yeah, yeah. So like if you use the degen box, you are basically borrowing against UST, and then you're creating a leverage position where it's like you have collateral as UST and you're borrowing against that. So, there's not the risk of liquidation as much as there is there's a risk, of course, if it depegs, that would be the scarier scenario, is like holding like a failed stable coin. And the problem with that degen box product allowed someone to go from earning 20% roughly to like you could earn 100, 130, 140% depending on how how much UST you are willing to borrow. Basically, your loan to value ratio, I think, becomes like the closer you get to like 95% or something, you're earning that much more uh, uh, with your UST. So the TLDR then is that's a cool product, and people have loved it so much that it's allowed anyone with stable coins or anyone who's willing to just go out and buy some UST to earn and deplete the anchor reserve. Whereas the anchor reserve was originally designed with the idea that there's borrowers who are paying an interest rate, and there's also the proof of stake assets that are earning validator rewards. And so basically, it's like it was like a happy balanced mechanism, and then you bring in the degen box, and it's just depleting all of that yield, to be earned like faster than what the system was originally designed to do. So it's been, I want to say the degen box has helped to grow interest in UST and Anchor, but I'm sure behind closed doors, Terraform's lab and other folks have to be like, Jesus Christ, like these sorts of products, we're just basically giving away yield at this point. We're just paying it away to satisfy these people who have really no stake in Anchor or Terra. They could just be holding UST. I could go swap DAI or USDC or something for UST, wind up a leverage position with it in just a few clicks too, because the product is really nicely designed. So yeah, hopefully that makes sense. I'm definitely misexplaining parts of this, but I would just think of it as like it's been depleting the shit out of the Anchor reserve.
Okay, yeah. And kind of not keeping pace on adding demand for UST, sort of, is that right? Like, because I mean, that's kind of the other part of the Anchor
Correct.
equation
Yeah,
is
yeah.
driving demand for UST, and so that boosts Luna prices, and there's kind of a reflexive thing there, but yeah.
That's exactly as people bond their Luna, and now they have B Luna and they borrow against it, and the UST market cap grows. It's created this virtuous cycle of, I mean, it literally continues to push up the price of Luna, and yeah, they definitely sort of like broke that system, by introducing the degen box. So it's never, so if you are on Anchor, if you are collateralizing or bonding your Luna, you are also earning the Anchor token, and so that has been a nice way, I think, of putting skin in the game, having you be incentivized and aligned with Anchor. Even if you were willing to just dump on the token, but yeah, this degen box it looks like everything else, Tom, you've seen in DeFi, where you have a mechanism that's designed, and the idea is that you align all these virtuous long-term holders and everybody wins together and it's not a zero-sum game. But then, the truth is, and these aren't bad people, they just people just say, fuck it, there's a ton of yield there, I'm gonna farm that. Like that's amazing. Why would I earn 20% when I can earn 140% with my UST?
Yeah, totally. This is something to read up on more, I think. But yeah, that's super interesting. Thanks for sharing that.
Yeah, no problem. By the way, I'm definitely butchering parts of that. If anyone from the Terra community ends up listening to this, forgive me. I know I've butchered parts of that explanation.
And if one of the stable coins DPEG, right, say UST DPEG, this will spread out so badly, right, into other stable coins. People can just use the DPEG stable coin to swap into other, the good coins in Curve, right, and other places.
I think so. There would be like a cascading, sort of effect because, and again, this is like real like doomsday thinking. Like I just think, I would like remind everyone that UST not only has like obviously whales and market makers that are working to maintain the peg, but there's a project called White Whale, and the idea is that they were doing arbitrage with the UST peg, and then they're basically taking those strategies and creating vaults out of them, kind of like Yearn, and then that allows more people to get exposure to ARB strategies that actually reinforce and protect the UST peg. I would say that the White Whale project, of everything I had learned about Terra, that was one of the projects where I was like, wow, like, I mean, they're putting every last resource into protecting what rightfully is like the centerpiece of the Terra ecosystem. I mean, everything is about having a stable, reliable, stable coin in UST. So those are things that help me sleep at night. But again, we've been living through like this incredible bull run, and people forget, the dark times. They forget that the number can truly go down for a very long time and ruin a lot of projects and create cascading liquidations and so on.
But I think it's not isolated, it's the wrong word. But if you have a pool and Curve and it's back to UST with another stablecoin, the weaker stablecoin will then it's like a black hole. So everyone is then selling USDT to get the more expensive stablecoin. So the pool is filling up with USDT, but it's somehow isolated. In the K, of course, not for Terra itself, not. And also, I think it's also one of my concerns because I have like a stake in Osmosis, and the Osmosis, one of the only stablecoin on Osmosis USDT, because USDT is also, because Terra is also it's built on Cosmos SDK, and so it will definitely have some spillover on other projects. But I don't think that the general stablecoin, that the stablecoin DPEG will have a lot of influence to other stablecoins. I guess most of people in the go to die or more established ones than the others.
Yeah, and probably if we really have extreme market condition and some of the stablecoin DPEG, and the only stablecoin pool, safe on Curve is only 3 pool, right?
Yeah. Hopefully, yeah. As long as USDT is fine, everything is fine.
USDT has been tested many times.
Yeah.
Also, there's just I'm part of the Terra ecosystem at this point. Like I've definitely found I resonate with. I think there's a lot of like long-term building mindset there that reminds me of the best parts of Ethereum, but it is a new community, and there's there are a lot of folks who have become very wealthy over just the last year. I mean, the token is up like thousands of percentage, over the last year. And it reminds me of the dynamic of like ETH and I was a total newbie then, but back in 2016, 2017, like I look at that and I'm like, I mean, there is that like simple old saying of like what goes up must come down. And the question is how much have we matured as a community? And I think like I wasn't a part of Olympus or Wonderland, thankfully, at this point. But as there are some like, I will say that as I watched what's happened between those two projects, I'm like, at the end of the day, like, we always go back to like fear and greed, and people quickly turn to fear. And this market has definitely shook a lot of folks. Whether or not, I have no idea if we're in a bull or a bear at this point, but I just know
I'm personally more concerned about the meme token. Even if it's maybe technology-wise, it's rock solid, but the community somehow, developments from today, somehow it's shocking, I guess, even for us, myself. We have been long in this game, but it's a little bit, I think I'm sad. That's maybe the good expression. I always had the feeling that this meme spell Wonderland stuff almost somehow shady, but this tops somehow everything you imagine, basically. I know if you all are aware that one of the members of, I think he's treasury manager, his role has been treasury manager of Wonderland, and he's the guy from the Quadriga Found.
Oh yeah, I know. I
exchange
saw that too.
This was like that's
wild. Yeah, that's wild. Well, I will say this though, with Olympus, I do know a few builders, and there are some really smart people that have worked on the Olympus Pro product, and I've used that, and that's been nothing but like a world-class experience using that with another project I work on. But I'm not going to root against or bet against any of these teams. I'm not involved in like.
Yeah, but Ohm is